Okay, Sean Bogle, Gradual Wealth Management. This is your Monday morning recording. This is July 21st. So I'll cover the weekly preview. Market have been open, so we've had some geopolitical situations going on. The shoot down of the commercial airliner in Ukraine has been weighing on this market. The situation in the Middle East with Israel, Iraq's out of the headlines, but I'm sure that's back there somewhere as well. So we have a lot of stressors, if you will, on this market. That being said, market's kind of holding up like a champ so far. We have some weakness this morning, but it's been relatively muted. So with that, I'm going to just go through. I'm not really going to go too much strategic today. I covered it pretty well last week on a strategic video, so we're going to kind of just cover the tactics of the market at this point, because strategically we're still the bull market's still intact. Nothing that's really has changed in that arena. So this is the chart of the S&P, obviously 500 here on the daily chart. So as you can tell, we're still in this kind of uptrend here. Tactically, we're still in sort of this bull phase as well, right? So I just drew a quick little trend line, upper level trend. So right now, as long as we stay above this here, really Thursday's low of last week is at least real short term will be the support level that the market needs to stay above. As long as it's above Thursday's low, tactically we are in sort of bullish shape still. Even if we have a down day in here, as long as it stays above that level. Our resistance is last week's high, which in the S&P came right up to the high from was that 2 or 3 weeks ago. So it didn't break out, but it kind of stalled there. So that's pretty big resistance there. 1985 and the cash S&P. So the key here for those of you who are in the bull camp is for the market to just, as long as it stays above these, and I'll even go back to the level from the prior week, low from the prior week. So we have two lows here that are quite close together. So the market really needs to hold those levels right there. And if we go do a sideways movement with all this geopolitical risk and all this people coming out saying sell the market, correction, and the market kind of holds in, that's a strong indication. That means as long as that continues, the shorts will get frustrated. People who are not long, especially the big fund managers, they're going to have to end up buying stock. It's what it is. But we're not there yet. We'll see what happens. Ideally, I'd like to see this market again hold into this range, and then it consolidates through time, and that will allow it to build the fuel for a potential move higher. At the same point, it could be the potential fuel for the next move low, for a break of this trend and a move lower too. So at this point, we're kind of tactically neutral in this range, and that's what we're going to wait and watch. We'll go to the Nasdaq, which again has a similar sort of pattern, although the Nasdaq has been weaker over the past 2 weeks than the S&P. So that tells you something. Again, something else I look at. I don't have it up here. Is the Russell 2000, the small cap. So risk has actually been coming out of that, and I'm going to just pop up a quick chart on the Russell just to show you the difference between small cap and a large cap. So this is right here the chart of the Russell 2000, and you can see here we've had a pretty nasty down move here. So again, in some ways you can say we've been in the risk-off trade over the last 2 weeks. And we do get these stealth sort of corrections. We just get it in other indices, and you just don't see it in the broad market, right? So it kind of stabilized here on the Russell on Thursday. So we'll see it kind of retrace 61.8% on the Fibonacci with that Thursday roughly. So again, this is going to be some pretty key support in the small cap, and a lot of people will be watching that as well. So if we get some weakness below Thursday's low in here, we're more likely we're going to get that move in the overall market too, because in that respect there may be some tactically the market may be catching a little bit of a cold there, and it really started in the small cap, but we're not there yet. So far, it's a Monday. We're just kind of, like I said, it's muted down response to the crisis in Ukraine. So that's what develops there is probably going to tell us how we move in this market. If Putin says to the West, "Screw you, I'm going to war, and I don't care what you do," obviously, we're going to see it it'll be reflected in the markets. So, just something to put in the back of your back of your pocket. To that will probably be the impetus for a break below these lows. But right now, again, we're still just consolidating, which again, this could end up being a continuation pattern, especially if we break above last week's high in the Nasdaq. Same thing with the S&P. We break above this little wedge here, it'll actually be more of a continuation pattern, and the market will just shrug off another geopolitical situation. But right now, it's too early to tell. Today, the Nasdaq is a little stronger than the S&P, which is somewhat encouraging, as it's been a little weaker, a few times in the last 2 weeks. So here we have we started on Friday. We had a nice relative strength move in the Nasdaq, and we'll see if that continues. Again, that's telling you again that maybe some money's getting put to work into the risk assets, and that risk-off trade we saw in the small cap may be potentially over. So that's it in the broad market tactical sense. We're going to go over some stocks that I know that some of our members are interested in. Let's do Facebook. That's been a name that's actually Janet Yellen said she believes there's a potential bubble in social media stocks and whatnot, and that was caused some weakness in the group, and Facebook just totally said yep, whatever, and made a nice move here, and broke above that 68 level on Friday, and is continuing today. So the key here is to I would really like to see Facebook stay above the 68 level, which is right here, and that will allow it to challenge the highs here in the mid to low 70s from March. Again, a very bullish reaction to negative news, to the geopolitical situation. So definitely something that if you're not involved in, you may want to be. Again, it gets tough when you start buying, when you miss the move and you're chasing something. So be cognizant of that. 68 is really that short-term stop level. I'd really like to see it stay above 68 from here on out for this continued move. Let's stay in the space. Go to Twitter. Twitter, after this pretty incredible move in June, went right to this downtrend line, this red line here that you could draw from pretty much the highs from way back when, and it kind of failed. But it's still above 35, which was this breakout level here. That's really the level I'm watching. So people came in and bought that support, which is good. What I really like to see now is it sort of get a day or two follow through the upside. It really needs to get above, get back above that $40 level to show that it's maybe that this really nasty down phase is over. So let's take a look at LinkedIn. This has been very weak in the sector for quite some time. Nothing. There's a little level here at the 163 level area, that it's trying to get above. It tried today, kind of failed, came right back in the zone. So it's again still kind of sluggish, not really doing too much. So Now I'm going to switch gears. I'm going to show you what is doing very well. Intel, you know, old tech. Look at this. This is amazing pattern here. We hold this in our long-term account from way back when, and it's just been an amazing run, and it continues. This is the earnings. Bought some more this morning above Friday's high, so we're so far being rewarded. Really want to see it challenge this high, and if we definitely get a break in the Nasdaq, this will be one of the stocks leading the charge. In the same vein, Microsoft, another monster move, another stock we hold in our long-term account. Incredible run so far this year, and again in here. Really want to see it. It's holding up well. So right now, short-term support's at the 44 area, and I want to see it now. Try to challenge this high again and continue higher. So it's been an amazing stock. Baidu. Just saw this morning. Not a big. Really didn't have it on my radar going into the day. I saw it gap up on a down, we had a down gap in the market, saw this gap higher above these levels, and just figured let me take a shot at it. And so far, can't complain about it. A little bit different. Netflix, took a shot here. Figured to get above these levels. Maybe now, bought a small position, not up in here. Bought it. After it pulled in a little bit, but it looks like it's not going to cut it, and it's looking like it wants to fill this gap lower. So Apple, same situation, kind of gapped higher. Didn't get involved in this. Didn't have my radar. Still don't. It's kind of out of play, especially after it gapped up last week and then kind of failed. Nothing that I really want to look at this point. IBM. Something that was on the radar last week, especially as it broke above here. Had an incredible move. Had some news come out with Apple. Had the earnings come out, so the buy level is right on this day right here. It's right now kind of messy as but the key here is I really needed to stay above these. 190 level is really what I like to see it stay above. It kind of dipped below today, I believe. Yep, 189. So really needed to hold this, today's low, and maybe it gets some support, and then can go make a move back above to these highs from last week, which are 196 or so. So we'll see on that one. I'm going to shift gears here and move over to something that I saw on the strategic. I said I wasn't going to talk about anything strategically, but I saw something in the steel sector, believe it or not. This is a monthly chart, which is kind of interesting to me because it's really been a extremely tough index. It's been a big-time laggard. It hasn't really participated in any type of bull run as the rest of the market, and it kind of makes sense. It's economically sensitive. The economy has still been kind of in the hasn't been so resilient. But what I see here, just technically, is potential little inverse head and shoulders, nice little sideways pattern since 2012. So the key here is that the steel sector needs to get above these, I'd say 1400. That might start a bull trend. But again, we're early. It hasn't done it yet. Hasn't broken out. Hasn't done anything. It could just continue to go sideways here for the next 2 years. But just something that I'm going to keep on my radar and watch. Because this may be the precursor to the economy getting better. People start seeing it. All the smart people in the world start seeing the economy getting better, and steel will be one of those that will anticipate an improving economy and may see some money go into this economically sensitive sector like this. So again, something that I'm just going to keep on my radar. I'm not making a call here that this is steel going to infinity or anything like that. Just something to keep an eye on. Another sector here, the I mentioned emerging markets way back when. Brazil is strategically potential right at this, kind of breaking this downtrend that's been pretty established, and this is kind of potentially very bullish pattern. It says this descending wedge, and when it breaks out, this again is a technical pattern. A breakout of descending wedge is usually quite bullish sign. So I first mentioned Brazil when it was back in here, and that was like February time frame. I said, you know what, for risk reward, this is a potentially good buy. Nothing to load in, but just to take a little bit of a position in it, and it had a pretty good run right back up to here. But now it's sort of breaking that descending wedge, something that you may want to start nibbling at, especially when now again, with all the crisis that's happening, it's actually on the high tick of the year. So Brazil. So in that same vein, we could probably call that whole brick type of brick stocks are probably doing quite well here. This is going to be a daily of the brick. If it loads at some point here, it's taking a while to load. Although the issue with the BRIC countries is obviously Russia is one of them, and Russia, the big risk now is with Russia. So to buy an ETF like the BIK, which it has some Russia exposure, may not be where you want to be, because Russia is probably something you want to avoid. But again, here's the Russia index. Yeah, you definitely want to avoid Russia. I mean, that's gotten crushed in the last week, especially on the day of the airliner. They shot down the airliner. I'll take that back. It's been alleged that they shot down the airliner. So something to you probably want to avoid. Let's see here. And we have some other. This is Europe. Has been a big laggard this past couple weeks, but here this is I'm gonna get some. Here's the India sector, which has been quite volatile, but actually has an amazing run so far this year. But like again, Brazil is one of those that I think right now is looks really good. Look at it breaking above these highs right here, again on the high tick today as we speak. So something that looks pretty good. I think that's really it. There's another stock that we had on our radar, kind of, VIP shop holding. So breaking above these levels here. We'll see how that ends up. And that's it, really, in a nutshell. So I hope you all are all well, and I see anything, I will update you on what's going on. Thank you very much.